While South Africa's sluggish economy has given us plenty of reasons not to invest, as there seems to always be clouds on the horizon and risk factors making investing quite uncomfortable. And for a little bit more on South Africa's current investment climate, we are now joined by Peter Armitage, who is the CEO at Anchor Capital. Thank you so much for your time, Peter. And I think let's start the conversation here a little later on this morning. You will be presenting the latest, the Navigator edition, looking into your investment strategy as well as allocation. Could you perhaps talk us through the current investment climate in the country?
Yeah, I think the investment climate is quite an interesting one, and I guess a surprisingly positive one. I think a lot of it flows through from the global phenomenon, where globally shares have done what nobody expected at the beginning of the year. The global stock markets are up close to 20%, as the huge interest rate increases that have flowed through in the world haven't resulted in big recessions in economies. The companies are doing pretty well. So that's flowed through somewhat into the South African investment market. The South African economy is pretty poor. But the investment market has shares in companies which have exposure to a weakening currency, have exposure to the dynamics of a very positive Chinese market. So the local market's done reasonably, not as well as global markets. A big feature of this year has been the weakening rand. So that's not great for South Africans. But for South Africans who've got dollar investments, and a lot of shares on the stock market are in dollar investments, that's been quite positive in rands. And then lastly, of course, the interest rates are much higher than they were a year ago. So you can earn 9.5% on your money without taking any risk in South African interest rate markets.
And I suppose, Peter, those are, of course, the opportunities that are opening up in the investment climate right now. And just circling back to those interest rates, we did see the SARB take a break last week from raising interest rates. Does that pose any risks or challenges to investments? And maybe just taking, a more holistic view, what are some of those risks and challenges specifically in South Africa's markets?
So I think the interest rates, so they stopped increasing rates at 11.75% prime, which is historically a very high number. So it's putting a lot of pressure on the South African economy and increasing the risk from that perspective. We came from, COVID lows at very low interest rates as they're trying to stimulate the economy to counter the effects of COVID. And now we've gone to the other side of it. I think, interest rates are supposed to help pull inflation down, but it's having very little impact on inflation, we think. Inflation has come down to 5.4%. So those risks have kind of started to work their way out of the system. But inflation is much more a result of the currency, of oil prices, of food prices, huge electricity increases. And interest rates don't really have too much impact on all of those. So the main reason we think that the Reserve Bank is keeping interest rates high and might increase them a little bit further, is to keep South Africa an interesting investment destination from an interest perspective. So fixed income investors in the world, if you can earn 9.5%, 10% in South Africa or 10.5% on our bonds, that's pretty attractive. So we don't want the currency to weaken. If that money kind of flows out, the currency weakens, and then in turn you get much more imported inflation. So that's the kind of economic dynamic that we're talking about. So it's kind of all eyes on the currency and trying to keep that pretty reasonable. But a lot of the risks, as the Reserve Bank pointed out related to that, are all about, government actions. The government's been shooting itself in the foot in terms of relationships with Russia, being aggressive with the US, just general infrastructure and government efficiency demise, which has manifested itself in electricity, water shortages, etc.
Yeah.
And that's seeing an overall kind of negative investment climate in South Africa.
But Peter, moving away from a little bit of negative, if we were to, just bring some positive light to South Africans, as Anchor Capital, what asset classes do you see presenting opportunities in the near future, despite all the challenges that the economy is currently facing?
Yeah, I think that's always the interesting thing is, there's the economy and the reality of our everyday lives, and then there's investment. And in every set of circumstances, there's opportunity. So all the negativity I talked about and negative views in SA from external have resulted in our bonds being pretty cheap.
Yeah.
So, our top kind of projected return over the next 12 months is 10.5%, 11% on South African bonds. South African equities as well, we think will do pretty reasonably. You must remember the South African stock market is more to do with what happens in China and South Africa. Because resources, Naspers, Richemont, a lot of businesses are effectively impacted more by the Chinese consumer than the South African consumer. So China's recovery is important for us. It's been stop-start this year. Remember, they were still locked in COVID in November, December last year. But we think as you get through into the second half of this year, the Chinese economy will show some more growth and will be fairly positive. So in fact, we've got a moderately positive outlook for the South African stock market. And within that, because of the negativity in SA, the kind of smaller cap shares in South Africa look like really good value. And if you're interested in playing in shares, chat to your stockbroker. There's some opportunities that we think only come around once in a decade or so.
And Peter, quickly, before I let you go, is this a good time for South Africans to get into the market, especially maybe first-time investors that are looking to benefit from those higher interest rates? Is this the right time for them to get into the market?
Yeah, we think the market is reasonably priced. I think we're saying a 10 to 15% return from the SA market over the next year. I think it's actually, ironically, quite a safe place to be. If you're worried about all the things that there are to worry about in South Africa.
Peter, thank you so much for speaking to us and for those insights. Of course, Peter Armitage is the CEO of Anchor Capital.